All right, all right. All right. There we go. Oh, wait, nope, wrong button. There we go. All right, all right. Hello, 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 hello. Hello, 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 hello. Hello, 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 hello. All right. Okay, so what's going on? Let's see. Doesn't taste hot. Man, the one time I make coffee, I haven't made it in a while. The spinner thing didn't spin, and the coffee's not even hot. It's not even warm. Hold on. This will not stand. Oh, it's just a comedy of errors today. Well, maybe this is better. Maybe not. Maybe it is. Maybe it isn't. All right. Okay, so we got numbers in the U.S. crude just dropped below 55 a barrel, lowest since early 2021. Oh shit! Well, we got hot. We'll let that sucker cool down. Let me see here. Let me make sure the settings aren't all weird. Okay, should be fine. Should be fine. Should be fine. All right. Non-farm payroll. So here's what we got. We got our numbers from October that we were missing. So we'll go through those real quick. Non-farm payroll growth totaled seasonally adjusted 64,000 for the month, better than the Dow Jones estimate of 45,000 new jobs. However, up from a sharp decline of 105,000 jobs in October. A negative 105,000 in October. The unemployment rate rose to 4.6, more than expected, and its highest level since September of 2021. And the more encompassing rate, which is the discouraged workers, people forced to take part-time jobs, things like that, raises the rate of unemployment, meaning that the real number, 8.7%. 8.7%. Isn't that cool? It makes him foggy. Watch. That look cool? Like I'm from the future because you can't see my eyes. People from the futures don't have eyes. They don't need them. They have diodes and nodes and shit. Anyway, establishment numbers show that most of the gains in November came from healthcare, which added 46,000 jobs. So almost all from healthcare, accounting for more than 70% of the total net increase. However, it's assumed that like the Fed and that they're not going to take too much from these numbers, these October, November numbers. Anyway, non-farm payrolls grew slightly more than expected in November, but slumped in October. Unemployment hit its highest rate in 4 years, BLS said on Tuesday. And again, they revised these things down mostly. Is the sound on? Well, Chad, is anybody else hearing sound? Anyone? All right. If you can't hear me, well, if you can't hear me, then you can't answer the question of whether or not you can hear me. Can you? Or can't you? It's just you, Chad. It's just you, buddy. Okay. Job growth totaled seasonally adjusted 64,000 for the month, better than Dow Jones' estimate of 45,000, up from the decline in October. Okay, so the more encompassing, more realistic figure. So just so you guys know, this is the highest level of actual unemployment since September of 2021. And if you go back and you count the discouraged workers and those holding part-time jobs for purely economic reasons, then it swells to 8.7%. And that's its peak going back to August of 2021. You guys remember September and August of 2021? Not great times. Anyway, in addition to the November report, the BLS released an abbreviated October count that showed payrolls down 105,000. While there was no official estimate, Wall Street economists were largely expecting a decline following a surprise increase of 108,000 in September. The chart is very bad. It's so bad, even a Fed official could understand it. I'll show it. It's so bad. You guys see that? Just remember, it's in reverse, right? Because I guess my camera's backwards or whatever. But do you see this? You see where it goes down there? That's October. Negative. So it doesn't take a genius to put 2 and 2 together on this chart, does it? There seems to be a trend going into the negative. So yeah, it's even a caveman can do it. Okay, so the October slump came obviously from the steep fall in government employment as deferred layoffs instituted earlier this year had taken effect. Government payrolls were off 162,000 for the month and fell an additional 6,000 in November. Many of those aren't coming back, by the way. So we shouldn't expect a big sharp rebound, which was why there wasn't a big sharp. I mean, I guess if you compare negative 105 to plus 64, but that 64 is going to get revised down probably into the mid 30s. So, or low 30s. So not a bang up job. And the October number probably going to be a bigger number of layoffs. So that's not good. The October number marked the third time in 6 months that payrolls had a negative print. The BLS report also showed that August numbers were revised down 22,000 to show a steeper loss of 26,000. So the revisions were revised lower. September's initial count was pushed lower by 11,000. The BLS had cautioned that the household survey, which is used to calculate the unemployment rate, will be affected for several months by impacts from the shutdown. Challenges in capturing the October numbers led to the cancellation of both the jobs report and the CPI. You say, why? Well, because they didn't have the employees to go run the surveys. Ain't no one working. If no one's working, ain't no one working. Despite the implications, the report painted a familiar picture of the labor market. The jobs climate continues to be one of low hiring and low to moderate firing, affected by stringent border practices under President Donald Trump that have drained the workforce of the usual influx of immigrants. The establishment numbers showed most of the gains in November came from a familiar source. Healthcare added 46,000 jobs. Construction rose by 28,000. Social assistance contributed 18,000. On the other side, the downside, transportation and warehousing was off by 18,000, part of a continuing trend in job losses for that sector. Leisure and hospitality also posted a loss of 12,000. This is just more of this buy now, pay later, or never pay stuff. You hear sound but no video. That's on you. Listen, folks, if your stuff's not working, turn it off, turn it back on. Always do that. Remember, if you call like a customer service rep, have you tried unplugging it? Have you tried plugging it in? Have you tried the power button? Just saying. The U.S. economy is in a jobs recession, said Heather Long, chief economist at Navy Federal Credit Union. Chief economist, that doesn't mean much. The nation has added a mere 100,000 jobs in the past 6 months. That's not great. The bulk of these jobs were in healthcare, an industry that is always hiring due to America's aging population. That part is accurate. Good for Heather Long. From a policy perspective, the Federal Reserve has had to walk a difficult line between trying to head off weakness in the labor market and guarding against stubbornly high inflation. Two things they have no control over. So it makes their job pretty difficult. You say, why? Well, because they don't, oh yeah, I think we're going to delete the comments, and I think we're going to do that. Yeah. I think that should, what are these? Yeah, okay, that guy's gone. Whew. All right. This guy with the 67, what's going on? I think we're gonna have to nuke him. I think he's been nuked. Okay. At its most recent meeting, as you guys know, last week, the central bank lowered its key interest rate by a quarter point, but signaled the bar is higher for additional cuts. That's not really what they said. That's not at all what they said. I think they kept things pretty open. They said there was really no base case for any kind of a raise, and that they're waiting to see what information. It said we'll be information dependent, data dependent. Fed has approved 3 consecutive rate reductions since September. Although I think you could make an argument. Let's pause in January and see where things go. Again, they have no control over anything, but you could see internally them saying, okay, look, we went 3 in a row. Let's wait a month and a half. Let's see what happens. So you can see that. The Fed is unlikely to put much weight on today's report, given data disruptions. The report on December's employment data released in early January will be ahead of their next meeting and will be likely what they use to make their decisions. And again, even Jerome Powell finally acknowledges that those the BLS numbers get revised down. Now he says 20,000. We know it's a lot more than that, but at least they are crypto aware. Yeah, crypto aware. All right. Average hourly earnings rose just 0.1% for the month, below the estimate for 0.3%, and we're up 3.5% from a year ago, the smallest amount gained since May of 2021. You see a lot of these anecdotal kind of references back to May, September, August of 2021. These are not good comparables. If that's the class that we're in, that's not a good class. The 0.1% increase in the unemployment rate was largely a function of labor force growth. Over the past 2 months, household employment actually increased by 407,000 jobs. However, it was offset partially by a rise of 323,000 into the labor force as the participation rate edged higher to 62.5%, meaning a bunch of new people entered the labor force, so that had not before. So I guess you got to look at the way that these numbers are comprised to get a fair understanding of the numbers, I guess, is kind of what they're getting at. In other economic news Tuesday, the Commerce Department reported that retail sales were flat in September against a forecast for a 0.1% increase, according to numbers adjusted for seasonality but not inflation. Excluding autos, however, sales increased 0.4%, better than the 2% estimate. So I guess autos down with autos. Crude drops to its lowest level since 2021. Yeah, and stocks are not doing great. Why? Because the economy is in the tank, or the taint, whatever you want to call it. The oil market is under pressure as OPEC members have rapidly ramped up production after years of output cuts because they realize, look, if people aren't driving, the longer we wait, the more people will just switch to electric. So we got to sell as much oil as we can before we can't sell no more oil. Now, obviously, petroleum products are used for plastics and all kinds of things like that, and pharmaceutical knickknacks. But why is this guy? That guy's so funny. Yeah. Investors are also pricing in lower geopolitical risk on a possible peace agreement in the Ukraine. Okay, well, there we go. So, all right. By the way, oil on Tuesday fell to its lowest level since early 2021. So it looks like oil traders are thinking there's going to be this large surplus and the possibility of a peace agreement in the Ukraine, which I think would be great for markets. Might not be great for oil, but whatever. WTI hit a low of 54.98 per barrel, the lowest level since February 3rd, 2021. Here we go again. Yeah. So that's not great. I mean, it's not great for the oil people. And you think, well, it's good for people driving around cars and stuff. Yeah, except that this is an indicator of global demand for oil, which is weak. And it's just more echoes of this kind of worldwide recession that we were, well, some places are probably in depression, but recession for us. After years of output cuts, OPEC members have rapidly ramped up production this year. Investors are also pricing in the possibility of lower geopolitical risk as President Donald Trump pressures Ukraine to accept a peace agreement with Russia. The threat of supply disruptions has loomed over the oil market since Russia launched its invasion in 2022. Kiev has launched repeated drone strikes on Russian oil infrastructure this year. The U.S. and its European allies, meanwhile, have targeted Russia's crude industry with sanctions. All right, there we go. Okay, so that's kind of the financial news side of things. And then we can go, and of course, the markets are kind of getting dick punched a little bit, but not, I mean, it looks worse than it is. It's not really that bad. Dow's down a couple hundred points, but that's really only 0.5%. Everything's down close to 0.5%. The Nasdaq's down 0.35%. It's not much. But I mean, people are having to be honest with themselves that the economy is not great. And when you have a not great economy, well, you have not great outputs, things like that. So yeah, let's look at these old crypto markets. Let's see what's going on over here. Let's see what this dick punch looks like. Well, we are still well below, look at the top number under overview, still well below 3 trillion. We should be over 4 trillion. I think we are in a bear market until we get past, oh, that was supposed to, hold on, let me do something real quick. See, that should have had some effect on that guy. Well, that's frustrating. Okay. Pew. Pew. Okay. So I don't think we're back in a bull market until we're well over 3.5, 3.7 trillion, and we're nowhere close to that right now. So we are in the doldrums, so to speak. Um, although at least Bitcoin is starting to grind its way up, that's somewhat positive. So we'll take it. Ethereum, I don't, it's it's strange that Ethereum always gets the worst punishment. It goes down the most. It recovers the slowest. This has just been a continuous trend, and nothing in the news, nothing in the crypto news, the crypto space has anything to do with Ethereum. It's all a Bitcoin show right now. But it has been bullying Ethereum dramatically. Who knows? So maybe people are scared of the investment. I don't know. Doesn't make much sense. There's no universe where Cardano should be up and Ethereum should be down. Those universes should not exist because Cardano is just it's a mostly worthless asset. Cool idea. But just worthless. It does nothing. It has a lot of functionality, but no one cares because no one's using it. Same thing with XRP. No one's actually using XRP. The only thing that's happening with XRP is it's being sold by the company, bought by idiots, the unsophisticated that believe themselves to be sophisticated, and then tell everyone about the Great Reset, the Great Financial Reset, which none of them can explain, by the way. None of these guys you see at parties and stuff can tell you what the reset is. It's like, well, what about, or they'll just say, what about ISO 10021019er? You're like, and what about it? I don't know. What about it? You just gave me a string of numbers that don't mean anything. Well, what happens when they go to that standard? Who's they? The banks. Why are the banks going to some random standard that you just espoused because 6 crypto guys say so? Well, the Swift, and it's just the same old crap. They just regurgitate the same crap that they heard, that somebody made up some dumbass argument on Twitter, and then these guys misquote that dumbass argument on Twitter. It's like, come on, man. And then you want to laugh at these guys, but some of them are like supposedly smart guys. You're like, well, how are you this stupid? How are you this stupid and you can breathe at night while you're asleep? How can you be this dumb and your brain somehow manage breathing in and out when you're asleep and not consciously doing it? I wonder. Anyway, it's surprising, but that's where we're at. Yeah, so I guess we're in a kind of quietly nothing market since yesterday. We got the big beat up yesterday, the 10 a.m. Eastern gut. What happened to ICP? I don't know. I've never thought ICP was anything interesting. Internet computer. It even sounds stupid. Algorand, basically useless. There's just a lot of, when you think about it, don't think about it as what would you want. Think about it as what do you need to do transactions in a Web3 way. This is why I think there is some real good IP over at Hypercycle. This is why I'm not worried. Let me tell you why I'm not worried about Hypercycle. Well, okay. Let me tell you why indirectly I'm not worried. There's some good IP under there. And Brandon and I talked about this. The fact that you could use that IP to launch a very enticing token. Not HYPC. It's not even directly participating with what Hypercycle is doing. This is a completely different thing. But you could see where a truly ledgerless blockchain with sub half second finality to push data really fast would be worthy, especially in this market where everything is bullcrap. There's Bitcoin and Ethereum and nothing else is useful. It's just tokens so that exchanges can get paid. Teams can get paid. Like, it's all, when you say why token, there's almost not a reason for any of these. Why? XRP is the best one. Well, to use the XRP ledger, guess what? The XRP ledger doesn't require using XRP. You can use Ethereum. You can use stable coins. You don't need XRP to run on the ledger. On the main business focus, use the XRP ledger. Use the ledger. Use the ledger. Ledger. Doesn't use XRP, dummies. I mean, not you guys, and no one listening here is a dummy. I mean, there might be some dummies that listen after the fact. By the way, I got reverse chewed out in a lot of these groups. I see there's a lot of people that don't listen to anything that I have to say. Sometimes they come and listen to the things that I have to say, but they only remember the things I have to say when they don't agree with their hopeful assumption of what the future is going to look like. No one wants to hear the bad. Everybody's like, no, just give me good news. Good news. So yeah, but you can see where most of these projects, there's no use or utility for the token. None, other than enriching a small handful of jerk-offs. However, this cycle seems different. No. Well, I mean, everything's different, Joseph. Yes, you're right. This cycle is different, but I don't know that that's a question. I mean, let me try to read that in the way that you meant it, but this cycle seems different. Did you mean it like that? I don't know. Is that a question or kind of a statement or like a, come on, Joseph, give me some grammar and punctuation. Are they still developing a layer 0? Well, remember that Hypercycle, the C Hypercycle token is a layer 0 asset. So it's a permissionless blockchain that can run these transactions. Think of it as a little container, and the container in it has a query and a payment in it. And on the other side, you have an individual, a node, whatever you want to call it, waiting for their question and some payment to do the work. So there you go. So yes, they have, and what you do is you do these kind of small permission environment scenarios where, because you don't have a unified ledger, I mean, you post transactions back to a ledger after the fact, but because you don't have a real-time unified ledger that everybody shares, a shared ledger, you have to have these kind of time-based spending scenarios where you say, okay, for the next X amount of seconds, this amount of currency units can be spent for these amount of transactions, right? So they kind of spin up in the way that virtual servers spin up when they're needed at AWS. You have these kind of limited time permissioned transaction environments that spin up, and then spin down, spin up, spin down. And those permission environments can be very, very quick, very small. Anyway, so you have to accomplish things in a different way with security in mind, obviously, when you have like a layer 0 type scenario. And again, this is all kind of, I don't know if it's technically a layer 0, but we're, I think originally they were calling it a layer 0, and it sounds kind of cool, layer 0, because because it would post back up to some other chains, probably EVM based chains, because there's like an EVM. Think of it as like an EVM diffuser, right? Like you can push transaction, the determination of transactions, not to mean dead transactions, but the finality of transactions. You can push those historical records back through this kind of EVM gate to an Ethereum based product. So you can post backwards to a ledger. It's like dropping a stone in the water and you see all the little ripples, right? Whereas the old school system is you drop the stone in the water and then there's the ripples, and then people count the ripples to make sure that the stone was actually dropped, and then they agree that the stone was dropped, and then they record that the stone was dropped, and then you have transaction finality. Make it, send it, validate it, right? Make it, send it, validate it. I even used to have a little banner for that. What are you guys trashing? They are tearing stuff apart today. They are on one. Make it, send it, validate it. That is kind of how transactions work. You, through a consensus mechanism, you make a transaction, right? Whether it's proof of work, proof of stake, proof of history, proof of, two billy goats kissing in a stream, whatever your proof of, your consensus mechanism, you make a transaction, you send it out to the network, and everyone validates it. And at some point, after a certain amount of validations that game theoretically the network agrees on, you have transaction finality. Bang! That's why, like, when you do a transaction, a Bitcoin, they'll say, okay, it'll be confirmed in 3 blocks, or it'll be confirmed in whatever. That's because it takes a little bit of extra time to make sure there's no double spend attack, there's no chain reorganization or anything like that, and to make sure that there's transaction finality. In this case, what this would be is something where the transaction happens first. So the transaction, so basically you have transaction finality or validation first, then you send it, then everybody sees that it happened. So it's, instead of make it, send it, validate it, it's how would you say this? We almost have to change the words up, because you're not finding the transaction through a consensus mechanism. You have transaction finality first, then you propagate that back. You back propagate that to a network so that later on they can say this is what happened earlier. It allows for a bunch of really cool things. It also allows you to create these little payment corridors and payment gateways. I mean, payment's not the right word, but if you're moving data around, you could create these little corridors. You could spin up these little corridors to do some really high throughput stuff, the kind of high throughput you would need for AI machines to talk to AI machines, and for AI to really evolve. You need really fast finality, and you can't have gatekeepers, and you can't have a whole giant network waiting to validate your transaction. Imagine if that's what happened in your brain when you walked on the wrong side of the road and a car was coming. You had to have some network agreement in order to get out of the way of a bus. No, you would die, right? So this concept of a clean, elegant, layer 0 asset based on that kind of technology that Toofy and those guys had developed. This is not Hypercycle. This would not be that. But something like that would be badass. And then super geniuses would come in and find all the uses for said badass idea. Right? So that's kind of where my head is at. And I think there would be a lot of value there. And I think that would be really cool. So hope is not lost. But I certainly don't mind being the messenger. It's just, in this case, you can't kill the messenger, because the messenger is strapped. The messenger showed up with an MP5. How about that? All right. Okay, so that's kind of where we're at. So I guess the answer to the question, the long circuitous answer, Mark, is, are they developing? Well, it depends on who they is. Is hypercycle developing this? I don't think so. But could it be developed? Yes. And would it be valuable? Yes. Would it be immediately obvious what the use cases are? Some of them, yes. Some of them, no. But it is enchanting. Let's just say that. It's enchanting. I'm enchanted. I'm enticed. Okay. So anyway, where does that leave us? What would you be doing right now? Nothing. I still don't understand. I'm still trying to read up everything I can and grapple with, how long are we going to be stuck in this kind of gooey crap market, right? Which we're all stuck in. Nothing's happening except for downward movement. There's nothing. It's sideways or down, not much up. We have 2 days of up and 17 days of down and 3 days of up and 14 days of down. And while that's depressing, it's nothing like 2018 and 2019. That was 2 years of this crap. So after having been in one of these really bad bear markets for 2 years straight, 6 months, 8 months, I don't care. I just can't keep dollar cost averaging. So yeah, there's that. But not a lot looks enticing right now to purchase. Yeah, not a lot looks yummy. I do think if the market can recover, if Ethereum gets back to 3,500, you say, "Well, it's a lot." Well, it was almost there Thursday. I mean, last Thursday it was pretty much there, and then of course the whale dickening happened, but Jane Street and their high frequency bullcrap, which no one ever goes to jail, no one's ever in trouble, whatever, it doesn't matter. So it is what it is. But I think we're about $500 away on Ethereum from really being able to start having a lot more fun with the Ethereum's option market again. So that's not too far away. Matter of fact, at the start of yesterday, Ethereum was 3140, meaning it was $360 away. Well, anyway, don't beat yourself up too harshly. Maybe it's a good thing that markets aren't racing into Christmas so that people don't go and buy stupid stuff. Keep your money, pay off as much debt as you can right now. I mean, I don't want to be going into debt going into the new year. So if you guys can possibly avoid it, you too should endeavor to not be in debt for the new year. We must endeavor. Does anybody here have any debt, any credit card debt? Anyone? That just made me think about, I better check and see if I got credit card debt on my Amex. I try to pay that sucker off every day. Yes, send the passcode. God. See what we got. See what we owe. $57. I'm paying it. I'm paying it off right now. $57. You are gone, buddy. You can kiss my grits. Bam. 0, baby. 0. See? Oh, I would show you, but I can't. I'll show you. Let me see. There's nothing private on there. Okay, cool. See? 0. I'm not showing you the black card because that's a business one, but the 0. I'll give you a hint. Let's see if I can do it. No, it's got all sorts of craps going on. What happened? Oh, well, it doesn't matter. Anyway, okay. I can go like that. Can I go like that? Oh, you want to see what it looks like? Let's see what it looks like. Oh, how good is that? Oh, that's some sweet stuff right there. Anyway, don't use that card. That card will get you in trouble. There's no limit on it. David, pay off your $20. Pay it off, fellas. I want everyone to endeavor right now over the next 10 9 days, over the next 9 days, I want you all to endeavor. Well, Joseph, you got to pay that off too. Endeavor to pay off all your bills. I want you to go into Christmas debt-free. Can we endeavor? Can we, as a group, endeavor to go into Christmas debt-free? How good will that feel? And the kid's like, what did we get for Christmas? You're like, you didn't get shit. But you know what? Dad is debt-free. Mom is debt-free. You little bastards are debt-free. How about that? The kid's going to cry. And you know what? This is a good life lesson. Let him cry. Let him cry it out. Go cry it out with your lump of coal. Wait a minute. You didn't get a lump of coal. You know why? Because we didn't buy anything. Because we're debt-free, bro. Then you take your kid to the hardware store, buy him some coal. They're going to be thankful you just gave him a great Christmas and a wonderful lesson about debt. Anyway, just rotating debt around. Well, that's different. If it's a business debt, I think you have a moral obligation to game it as much as possible, as long as it's not on your personal Social Security number. You do what you got to do. Listen, man, you run a business, you got to live in that gray area. Within banks, got to live in that gray area. But if it's your personal, be careful. All right. Let's call it a day. If you guys go to the coffee shops, tip a little extra, get be nice to people. It's a tough time of year, right? And I saw this lady was wearing a shirt that it was kind of like, it was funny because she was actually complaining to somebody. And I was like, man, you didn't even read your own shirt, lady. But essentially it said that be careful because there's all sorts of people fighting all sorts of internal battles and struggles that you can't see from the outside. You don't want to be the person to poke that bear, right? So someone's behaving weird, if they're being a jerk, whatever, just assume that they're fighting their own demons. You don't need to fight their demons with them. You don't need to become an extra demon, right? So, yeah. Let's see. Worst Q4 ever. I have a lot of people not buying my stuff. It's a bad Q4. It's a bad Q4. But you know what that means? It can only get better, my friends. It can only get better from here. There you go. All right. Stay in school. Don't do drugs. Don't do anything my poor and solvent drunk, strung on meth grandmother or Brandon wouldn't do. He will be back tomorrow on the morrow. I've got him cracking the whip with some of my developers on our project. He's joined the team to do some project management. Oh, yeah. Okay, and we'll see you guys tomorrow.